Hello, everyone, and welcome to day 11 of our marine cargo insurance course. Today, we are diving into two unique and very important concepts in maritime law and insurance, that is, general average and salvage charges. These might sound a bit complex, but they are crucial for anyone involved in shipping. We'll break down what they mean, how they work, and most importantly, what they could mean for your cargo and your wallet in a crisis at sea. So let's start with general average, often just called GA. This is a very old principle in maritime law, formalized by rules called the York-Antwerp rules. In simple terms, its definition is this: imagine a ship and all the cargo on it are in a serious danger, say a huge storm. If the ship's captain deliberately sacrifices something or spends money to save the entire ship and all the cargo, then everyone who benefits from that rescue, meaning the ship owner and all the different cargo owners, must proportionally share the cost of that sacrifice or the expenses. The core idea is captured by this phrase, that which is sacrificed for the benefit of all shall be made good by the contribution of all. It's about fairness in a crisis. There are three key elements for something to be a general average. First, there must be a common peril, a serious threat that endangers the entire ship and all its cargoes, not just one part. Second, there must be a voluntary sacrifice of the expenditure. This means the captain intentionally made a decision to throw cargo overboard or spend money or specifically to save the whole venture. It wasn't an accident. And third, there must be successful preservation. This action taken must have actually worked in saving the ship and its remaining cargo. If the sacrifice was made but everything was lost anyway, it wouldn't be general average. To make general average clearer, let's look at some examples of General Average Act. Jettison. This is probably the most classic example. Imagine a ship caught in a violent storm and it's taking its on too much water, threatening to sink. The captain might make the deliberate decision to throw some cargo overboard to lighten the ship and save the rest of the vessels and the cargo. The value of that jettison cargo would be part of the general average. Next is salvage operations. If a ship becomes stranded or disabled at the sea, then a specialist salvage company is called in to rescue it and its cargo. The cost of that rescue operation can be declared as general average. Next is port of refuge expenses. If a ship suffers damage during a voyage and has to make an unplanned stop at a port of refuge for emergency repairs to continue its journey safely, the costs incurred on that at that port, like port fees, unloading, storage, and reloading, can be a part of the general average. And the next is firefighting expenses. If there is a fire on the board that threatens the whole ship and all its cargo, the cost of putting out that fire, even if some cargo gets damaged by the water from the firefighting, can be general average expenses. So, what happens when a general average event occurs? So, there is a specific purpose. First, the declaration. The ship owner officially announces that a general average event has taken place. So, this is the formal start of the process. Next is there's adjustment. An independent expert called a general average adjuster is appointed. Their complex job is to gather all the details, calculate the total cost of the general average expenses, and then work out each party's exact proportional share, meaning how much the ship owner and each cargo owner needs to contribute. This can take a long time, sometimes even years. And then there's the security. This is a crucial point for you as a cargo owner. Before your cargo can be released to you after a general average event, you must provide what's called general average security. This is usually a promise to pay your share once it's calculated, and it's typically provided by your marine insurance company in the form of a general average bond or guarantee. Without this security, your cargo won't be released. So, what are the financial implications for cargo owners in a general average situation? This is where your maritime cargo insurance becomes incredibly important. Without marine cargo insurance, if your cargo is on the ship that declares general average, you would have to pay your share of that general average contribution entirely out of pocket. This can be a very substantial and completely unexpected bill, potentially causing significant financial strain. However, the good news is that marine cargo insurance coverage typically includes general average. So most common marine cargo policies, especially those under Institute Cargo clauses A and B, specifically cover your contribution to general average. This means your insurer will pay your share of the general average cost, protecting you from that large unforeseen expenses. Now let's look at the salvage charges. Salvage charges are basically a payment given to a third party called a salver, who voluntarily steps in and successfully saves property like a ship or its cargo from a danger at sea. They are being rewarded for their rescue efforts. A common principle in salvage is no cure, no pay. This means that the salvors are usually paid only if their efforts are successful in saving the property. If they try to rescue something but fail, they typically don't get paid for their time and effort. There's a relationship to general average there. Sometimes the salvage operations can be declared as a general average act if the rescue was done to save the entire ship and all its cargo. However, if the salver only manages to save the specific cargo, it must be considered a particular average expense, which is a loss just for that specific cargo owner. Insurance coverage for salvage charges is usually included. Marine cargo insurance policies typically cover the salvage charges that apply to your insured cargo. So, to clarify, let's compare general average versus particular average. They sound similar, but they are quite different. General average, as we have discussed, involves the loss of the expenses that was incurred deliberately, meaning on purpose, and it was done for the common safety of the entire maritime journey, including the ship, all the cargo, and the freight. Because everyone benefited from this sacrifice, the costs are shared proportionally by all those parties. Particular average, on the other hand, is a partial loss or damage that happens to specific cargo due to an accidental peril. For example, if only one of your containers get damaged in a storm, or if some of your goods are stolen, that's a particular average. The key difference is that this loss is borne solely by the owner of that specific cargo. It's not shared by everyone else on the ship. Of course, this type of loss would also be covered by your marine cargo insurance if your policy includes that specific peril. So that concludes our session on the general average and the salvage charges. These are truly unique concepts of marine insurance that highlight the complexity of the general global shipping. Now I'd love to hear from you, thinking about everything you have covered today in a general average situation. Why do you think it's so absolutely critical for cargo owners to have multiple to have marine cargo insurance? What is the biggest risk if they don't have it? Please share your insights in the comments below. Thank you so much.